On that note, let's get to business as usual. We invite our next guest on the show. Sarang Wadhawan, the Vice Chairman and Managing Director of HDIL, joins us. Sarang, good morning. Thank you very much for joining us. It's a special day for us, but I will have to start with the tough question. There is that FIR filed against some government officials and some of your officials. Can you tell us what is the status at this point in time, and how serious are the charges?
Well, firstly, let me congratulate you on your 15th anniversary. The FIR that has been filed under Section 156(3), where it has been ordered to be filed by a magistrate. There are no serious charges whatsoever. It's a malified intent by one of the people who were residing in those areas who were ineligible irrespective, and that ineligibility has been held by the government of Maharashtra, not by HDIL.
Okay.
We have all the documentation to prove that the FIR has been filed with malified intent, and we will be submitting all the documents to the Anti-Corruption Bureau, and as such that FIR will be quashed immediately by the Bombay High Court.
Fair enough. Now that record is on the table, let me start with more business questions. We have begun to see some commercial deals that have happened, especially in the area where our office is located at Lower Parel. Commercial space has been sold and at fairly good rates. As well, we are seeing zillions of bots coming up in Mumbai city itself for exhibitions of property sales. Is there a mood that buyers are back, or are you only sensing that they will be back?
I think the overall mood in the real estate industry has improved. The overall mood for the buyers to get back into the system, to deploy the savings that they have accumulated over the last couple of years is back. We are seeing green shoots of revival. I mean, even on the residential fronts, we are seeing good traction right now in projects where there is currently execution going on. I think the differentiating factor here between the companies is going to be the companies that are executing will be able to sell, and the companies that are still trying to launch their projects based on approvals, are still trying to launch their projects based on just word, I think they're going to find it a little difficult to sell. But companies where people can actually see brick and mortar coming up, I think that's where the sales are going to happen.
Okay. You're still saying going to happen. If you were to compare this quarter with last quarter, at your own in your own projects, are you seeing an improvement in volumes? What kind of volumes the quarter is almost ending?
I think in the residential area we're seeing improvement. I think in the residential segment there has been a marked development, a marked improvement. Our projects in Mulund and in Nahur are seeing good sales happen. Last month itself we sold about 40 flats in one of our projects. This month has also started on a good high note. I think overall, if you see compared to last year, I think we've done pretty well, but still I think there is still that momentum still has to gather pace, and I think the moment it does that, you're going to see the building industry, the real estate industry come back with its revival plans. I think also the fact that developers have been focusing a lot on debt reduction and have been trying to offload their inventory, trying to offload the other parcels of land that they have. That is helping the developers. For example, HDIL has offloaded quite a few of its businesses, the other businesses, the other land parcels. We've been able to reduce debt, so that has actually helped us put some focus back on execution. It has helped us put some focus back on approval processes, and basically put our focus back on the core business.
Okay, can you give an idea what's your debt and how much has it come down by?
Currently we are at 3,400 on a consolidated level, what we had given in the quarter results. We are working towards this quarter. We are hoping that we will be able to reduce a substantial amount of debt. The figures I can't give it to you, but come January, end February 14th, I think we should be able to give you those figures as well.
Okay. What might quarterly sales look like? What was it in Q2 and what is it likely to be in Q3, now that we are just about 20 days short?
See, overall, it's very difficult for us to give a guidance on the numbers for HDIL because of our accounting methodology. We've been able to maintain a run rate of about 300 odd crores, 350 crores per quarter. But it all depends on the completion of projects. This year, and we are envisaging the completion of our Andheri project. Now, that could actually help us get in a lot of revenues, although the margins will be a little compressed, but the revenue figure might shoot up a little bit because that project was pretty big and that's getting completed in March. Now, this is the problem in our accounting methodology, but that's also a conservative accounting where we are actually, we follow the norms very correctly. So I think, to maintain the revenues at 300 and 350 crores is what we are looking at, and maybe there could be a spike at the year end.
Okay. Will we see a fall in your interest payments, interest outgo in either the current year or the next?
Lata, if I keep reducing the debt, then definitely my interest outgo is going to reduce as well, right?
I'm trying to get a ballpark number, if you can.
We have reduced it, I think, from about 140 odd crores, which was per quarter. I think we reduced it to about 110. If we are able to, live up to our guidance of about 20% reduction in debt, which we are targeting for the year end, you can see another 20% reduction in that debt figure, the interest outgo figure. I think at about 80, 90 odd crores a quarter, I think we'll be very comfortable.
Are realizations improving at all, or are they flat, or are they even dipping a bit? I mean, rates across the city.
I think the rates are stabilized. I don't think there is a reduction in rates, but I do believe that people have the money to actually make payments. People are just holding back. People have stayed out of the system for so long and saved up all that money. Now is the time that what we saw in 2010, that given a 5% reduction in interest rate in the price, people do come out in hordes and start buying. And I think over the next year or so, you're going to see that all those savings which are out of the system are going to come back, and that is what's going to revive the real estate industry again.
Okay. No, I also know a lot of investors who are stuck, big HNIs, with real estate. So do you think that prices remain flat because there will also be the selling pressure?
See, let's be very honest, investors are stuck primarily because they look for quick returns. At the end of the day, investors are invested into projects where they have invested when the projects are just at the ground level or at the basement levels. Now when the projects are coming up, they expect quick returns and change in price. But that does not happen in a recessionary market like what we've been in for the last 4 years. I also believe that the real value lies in the end users taking over those properties. Investors get in at a particular price level where it is discounted because they enter in at a premature level. But I think till the time we don't see a good traction or a good movement in the real estate market, in the residential segment, investors will have to wait for at least a couple more years to turn around the inventory.
All right. Sarang, pleasure speaking with you. Thank you very much for joining us with those observations for the industry and for yourself. We have to take a break on that note, but when we return, key market insights are lined up with market wizards Ramdev Agarwal, Madhu Kela and Prashant Jain.